The true driving force for the SPY price movement will eventually be the Fed, actually speaking this Tuesday and Wednesday. But let's go ahead and see what statistics and price action have to say about that. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a SPY, technicals, raw price action, and statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at SPY on the 8-hour chart here, and this is actually per a request from a YouTube subscriber. I believe his name is Eric. So Eric, this one's for you, buddy. Okay, so we're definitely looking at an ascending channel here, which usually presents a bearish outcome for price action in general, if we're looking at formation analysis, right? So now within this formation is something very curious. The pink lines are actually exposing a potential right-angled broadening ascending wedge. So this particular formation is a bullish formation, and it does have, well, actually, you know what, we can go ahead and it does have both. I mean, technically speaking, it has both the bearish and bullish price objectives per the playbook rules. But apparently in Forex, 70% of the time, this does realize to the upside. Okay, so since we're not in Forex, so that we have to consider both of the outcomes in this situation. Okay, so we're gonna go ahead and look at why I have this trend line coming down to this area here, because in this price action it looks like we're still continuing to the downside, and to the downside it could be relative to the 1.618 at 389.43. Which has some confluence to the bottom of this support line from the wedge. Now, if we were to make a slight adjustment to the trend line here, following a different set of contact points, to where we actually took it like this and used this contact point and this contact point, then we would actually see a bottom target that's in confluence with the 2.618 at 383.78. So right around there before a bounce and a continuation to the upside. Okay, so there are two possibilities here, and not to mention that the indecision that I'm looking at here is very much what's happening with the overall sentiment. Okay, we don't know where we're going to go. Everything is dependent kind of on the Fed. Not to mention the possibility of actually having the trend line be a horizontal line, thus making this a bearish. That's making this formation a bearish formation itself. So when you have a right angle triangle with a horizontal line like this, that is typically a bearish formation and would suggest a continuation to the downside. In this case, it would be more along the lines of the inverse 4.618 at about 372.49. But we're not there just yet, since there are several outcomes panning out for this formation. If the formation is leading the horizontal line, like we said, for the bearish particular formation, it would line up with the bearish nature of the ascending channel. Okay, so that would technically play along or rhyme very well. Okay, so let's go ahead and move on to the statistics, because the statistical analysis says something entirely different, which is in opposition from the downside thesis. In this case, we are looking at an upside move if it is playing out the bullish case scenario, but we're going to come right back to that after the statistics. So this is the statistical analysis, and I've actually performed the back test that consists of volatility versus momentum. Okay, so for the new viewers, new listeners, this is volatility you're looking at, represented by this indicator BBWP. BBWP, or volatility, is direction neutral. So in order for us to gain a bias for that direction, we actually pair it with an indicator like this one, stochastic momentum. In this case, stochastic momentum is proprietary to TradingView software, which, by the way, the link is in the description below. It really does help me out when somebody creates an account for TradingView. Okay, so in this case, we are looking at a continuation to the upside based on stochastic momentum. Stochastic momentum I have tested by itself in several tickers, $2, and it has given me an average 75 to about 91% in guessing the asset's direction. So it's not perfect, but it is very good to consider. The score is pretty high. Okay, now in this situation, we're going to go ahead and explain now exactly what the backtest consists of. Okay, anytime that we have expanded into critical volatility, which I consider to be anything above this blue trend line here, which is about the 90% and above. So within the 90 percentile, anytime that we have expanded into those levels, I have taken note of that iteration's duration, the upside thrust, and the amount of times that the iteration or volatility versus momentum have guessed the upside correctly versus incorrectly. Okay, so in this case, I'm sorry, I forgot to mention that this is throughout the entire trading history of SPY, particular to the 2-week chart, to the bi-weekly chart. Okay, so I've actually taken note of these all by hand for this backtest to be possible for us. Now, out of a total 17 iterations throughout the entire trading history of SPY in the bi-weekly chart, we have a total of 16 guessed correctly to the upside, giving us 1 incorrect, and that actually comes out to an averaged upside accuracy of 94.11% with an averaged upside thrust of 15.21% over the span of just over 141 days. Okay, so definitely a few months to consider for this upside move to happen. Okay, statistically speaking and averaged. Okay, so these are not certainties; they're just statistics. So we have to know the difference. Okay, so in applying, the reason why we could apply the move now, or the upside move now, is for the fact that the signal has fired off. Since we are now in a contraction phase towards the downside, you can actually see that the volatility component from BBWP, which is this spectrum line, and the moving average are both pivoted towards the downside, contracting to lower levels, while stochastic momentum is suggesting an upside continuation. Please remember that every single candle here you're looking at is a 2-week read. So it takes 2 weeks for one candle to be completed in this chart in particular. So I am looking at the macro perspective here, okay, which is why we're getting an average duration of this is why we're getting a large averaged duration. Okay, so in applying the move of, let's see, the 15.21% upside thrust, we actually get a top target of about 454.69, which is in direct confluence with the 618, 454.13. Okay, very curious that it would take us to the golden mean. So all of the 618s are a golden mean. This is usually where the trade likes to take the price action to. Okay, so if we're looking at that target of 454.13, let's go back to the first chart. Like I said, we were the price objective based on the breakout from about at this point here, which could present a bounce from this area to this point. You're looking at a bounce of about let's see, the breakout point would be at about 420.61. So the price objective in breaking out from this point of this formation would actually be something like this. Actually, let's go ahead and just take a trend line actually and correct it. So we're going to take a trend line from that point of, the supposed point of breakout. It isn't a certainty. I'm just saying if we were to break out at this point, which is confluent with the 618, the top area here at 420.61, we apply the price objective right over here, and guess where it takes us? It takes us directly to 454.23. So there's massive confluence here. So, and not to mention the fact that it is the highs of this is September 3rd, 2021, the dates you can see right down here. Okay, so you can see that those are the highs, and it has confluence with that point as well. So I wouldn't consider this a reversal just yet, because all in all, if you're looking at a macro perspective, it would be just making a higher low. Okay, so in this point, if we're not, as long as we're below, I'd say, as long as we're below 462.22, we're pretty much in the crapper. Okay, so yeah, we still need some more thrust in order for us to confirm a valid reversal point. Okay, so Yeah, this is what I'm looking at here, and there's some massive confluence, but there are some criteria to be met before we can make that upside move. First of all, I do see a potential drop to the 389.43 in the immediate short-term time frame based on this candle structure. Pardon me. Let's go ahead and move on to the last part of the chart. Okay, so let's just open up this one here. And to back our downside thesis with the candle analysis, I have actually caught some drives of bearish divergence, regular bearish divergence. So divergence is usually the opposition of price action versus momentum. In this case, momentum represented by this indicator, RSI, Relative Strength Index. Okay, so just for your information, the pink line is the 14-day moving average, which is stock to any RSI indicator, and the purple line is the RSI signal. Okay, so you can see that we have 1, 2, 3, 4 drives of regular bearish divergence, which usually happens when price action is making a series of higher highs, in this case higher highs, and the RSI, or momentum in this case, making a series of higher lows. So in this case, from this high to this low right here, which is right over here. Now, the fact that we're going through all this price action to get from point A to point B actually makes this a phantom drive. Okay, so we are looking at here, right here, 1, 2, 3, 4 primary drives of phantom regular bearish divergence. Okay, so it looks like it is in play thus far. Now, this price action on the 12-hour RSI is suggesting a continuation to the downside. However, if you can notice this kink here, it looks like it's starting to lose some strength. So there is the potential to where we can actually face something like this and continue on to the upside. But as long as we remain in the deep areas of the bear weakness percentile, which is usually in this zone right here, which is this bear weakness percentile, which is this upper half of the lower half, right in this area here, we are, we're at risk of being gravitationally pulled into the bear strength percentile, which would be right over here. Okay, so that's something that we do have to keep in mind. Now let's open up the last part of this analysis, which would be a multi-pane, so that we can see direction bias for starting from the immediate short-term time frame. Okay, so immediate short-term 30-minute is suggesting just sideways trading here. This is very much it very much is in accordance, or it is suggesting the indecisiveness that's happening in the market due to the in expectations of what the Fed is going to say on Tuesday and Wednesday. Okay, so this is potentially, for the immediate short term, potentially facing some sideways, maybe a little bit of bearish action, but nonetheless sideways. Okay, so the bi-hourly chart, or the bi-hourly RSI, has now entered the bear strength percentile, which is right down here. Okay, now we are below the RSI 14-day moving average, which is bearish, okay? But as long as we remain in this shallow area of the bear strength percentile, we're likely to be gravitated right back into bear weakness. And as you can see, the pivot is starting to slow down just a bit, okay? So now the 6-hour RSI is suggesting a continuation to the downside. It has recently broken into the bear strength percentile, but just like I said, as long as we do remain in these shallow areas, we are prone to be rejected and taken right back into the prior zone, just like what happened here. When we're in those shallow areas, we just get right back into the prior zone. Now, the daily RSI, since we already saw the divergence chart on the 12-hour, is suggesting a continuation to the downside. And again, we're right in the junction of, or right at the actually, we're right in the middle of of either zones right here, which usually means some sideways trading. Okay, so if we're going to face some downside, it's going to be potentially towards the middle of the session or end of the day tomorrow. And the suggestions of the RSI are in accordance to what we're looking at here. We're potentially looking at a drop to the range of about 390 to about 389.43. So this could be an area for a bounce if we don't just get some massive bad news and just, capitulate to the lower side. But I think this is a pretty good place for me to leave off the video. Know that I'm not a financial advisor. I can't actually suggest for you to buy or sell any assets. Take whatever I do show and iterate within these videos as a form of entertainment only. Okay, if you do have any questions or concerns, don't hesitate to reach out to me. I'll make sure to leave the links in the description below for you to consider joining the ARCap trading community in Discord. Okay, so with that said, I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.